trading session so far. Let's talk a little tech too. He's a chief market strategist at bullseyeoption.com. Just the man we need on a day in need of some energy, Alan. So I give you permission. Fire away, sir.
I'm just going to ask you questions.
No, that's not allowed.
No. So
gotta keep the traffic flowing in the right direction here.
All right, but what stock did we talk about incessantly that nobody liked? And who's the leader on the board today, my friend?
Tesla?
There you go. Look at that breakout.
That's true. Yeah, last time.
Look at that breakout.
No, you're right. We talked about that last time.
Right, so that's an amazing bottom, just like Apple had, where it made new lows but not new highs and implied volatility. That was a sign of a sentiment shift, that all the short sellers have run out of strength. And guess what? You saw money flow into that stock in long accumulation, and boom, we're off to the races again. I mean, we rallied from under 150 to 225. I said a breakout above 200, and this is for real. And now, how are the shorts feeling about Tesla today?
That's what I tweeted this morning. The Elon haters are squirming. Because I feel like they got in their own head, about like everything. And then they voted to keep his pay package. He's the guy who's been running the business forever. They got it to where it is. I mean, shipping hundreds of thousands of electric vehicles. I mean, they're like in a world of their own. So
you don't have to like Elon, but you can't argue with success.
Sure.
I mean, there's a reason that he was the richest man in the world. How he got there and the subsidies and yada yada. That's one thing, but it's about scoreboard, and that's what I'm here to talk about today. The S&P, it's halftime for the year, and the S&P's up 15%, and the Nasdaq's up 18%. So where's my friend Ben? I mean, you can hate the game, but you can't hate the results. And, the market's just momentum market, new all-time highs again yesterday.
Yeah. Well, your friend Ben just left the studio, but yeah, that's exactly how he's been describing it for months, is that it's like the Goldilocks, ignoring anything negative, going with the positive. So, yeah.
Right.
The move generally, to come back to kind of the strategy of picking stuff that's been down to then catch up, is kind of interesting, because the last 2 weeks, basically, the NVIDIA trades kind of stalled out, and a lot of folks have been looking for like value cyclical stuff to work, but I don't really think that's the way to think about it. I think it's kind of been more in your realm, which has been just look at stuff in the categories that are winning but haven't been winning stocks, because the market still hasn't rotated into really like other stuff. It still is like, they're just looking for the Mag 7 or tech trade or AI trade that hasn't rallied yet.
Yes and no, but the sectors we've talked about here recently is the resource sectors, is commodity sectors. They have so much more upside than a lot of these stocks. If you look at the CRB, the basket of commodities, and I know this is not the future show, but the commodities market is about the halfway point of its highs. And so there's a lot more upside in silver and in these steel companies and Freeport-McMoran and so forth, and GDX, the gold miners are at
those been struggling a little bit more.
Yeah, so they move a little bit more slowly, but this is where the risk reward is. And to finish this off, look at the oil stocks. We kept talking about that, oil's coming up on that $85, and we're going to look for a breakout, and you're going to see not a lot of non-believers squirm again, and that's going to, a lot of these energy stocks still have a really ridiculously low PE, and XLE, the energy ETF, the PE is like 8 or 9. So there's value. There's value that has a lot of better risk reward than the NASDAQ. Not to say the NASDAQ's not going to continue to rip, but I think it's about risk reward.
You think crude, just real quick, Alan, on crude, because we're going to talk some Cisco here. You think crude has opened the gates now that it's held $80 solidly for a week?
Oh, yeah. And so if you look at, you can see Oxy last week broke its downtrend angle, led the way. And compared to XLE, they all have almost the exact same price pattern, and they're setting up for success here. We also saw bullish diversions in Schlumberger here recently. Schlumberger came down to its critical support, held, tested, rejected, made new lows, but not new highs in implied volatility. A nice, healthy bounce in Schlumberger. But if you look at the price pattern, you've got Oxy, you've got Halliburton, Schlumberger, they all have the exact same price pattern, and they're bouncing right now from a risk reward standpoint. They're 10-15% off their highs from April.
All right. Okay. So we'll add the energy trades to the list of recovery strategies.
Yes.
Alan, speaking of recovery, the trade that we've got for this morning that you sent over in Cisco, that definitely fits the criteria of good category, bad stock.
Yes.
Well,
no love.
trend so far.
Now,
You know.
so we've seen Cisco, Intel, and Oracle, kind of the old legacy stocks, have their time and back off and so forth. But if you look at that, obviously the Nasdaq's up 75% from its 2022 bottom. This stock is only up 20%, so it's got a lot more room to move higher. So the PE on it is also 13. So they make money, they're profitable, they do well. We're 25% off the 2021 top. And we've been trading sideways for the year between 45 and 55. So 50 is an important confirmation for me. So I trade in the money options. We pop above 50. That means I'm definitely on the right side of the trade here. We also saw this bullish divergence just 3 weeks ago where it made new lows, but not new highs in implied volatility. That is a sign that things are changing. The psychology has shifted. And that's when these stocks can make a move. And just a modest bounce in the stock produces big gains in the right option.
Okay. All right. So buying the call, looking for your Cisco to catch up. It's got a couple weeks behind it of strength, but a whole year to contend with. So
the way to
go ahead.
I was going to tell you the way to play that is with an October option.
Okay.
An October 45 call. Again, that's the low of this range. If we get up to 50, then it should pop to the range top at 55. There's a gap at 55 up above. And we're seeing money flow, that leverage long accumulation I talked about. We're seeing that bullish divergence. We're having 3 months of time. And that option, if you look at it right now, it's 275 in the money, and it's trading for about 375. So I have limited risk, plenty of time. I can sleep well at night. I'm leaning on that super level of support. If we just get to the 53 level, I'm not even looking for it to fill the gap at 55. If we just get to 53, this option gains 100%.
All right. Like it. Pulling up in a beaten down forgotten tech trade. Thanks, Alan. Fun chat.
Thank you.
Yeah, Alan Uckman, Chief Market Strategist at bullseyeoption.com. With the Tesla breakout, and looking for energy stocks next, as well as Cisco. Coming up, we're going to talk some AI. We're going to talk some biotech also, trying to mix some of the growth